thank you all for joining us this evening. We really appreciate the opportunity to present. By way of quick introduction, I am Stewart Hall, the CEO of Public Policy Holding Company, PPHC. I've spent 27 years of my career in the public policy economy, most recently, again, as founder and then ultimately CEO of PPHC over the last decade. Prior to that, I had built up and sold a direct advocacy US-based lobbying firm to WPP, who many of you are familiar with, and glad to be here tonight. Roel?
Good afternoon, good evening. My name is Roel Smits. I'm the CFO. I joined PPHC about a year ago. And prior to that, I was active for 18 years at WPP and its subsidiary Kantar, both in M&A as well as in the CFO capacity. The accent that you're hearing is Dutch, but please don't hold that against me. Over to you, Thomas.
And I think it's called a hat trick on 3. So you'll hear a commonality. We are all former WPP alums. Eyes on the other side of the political economy, I guess we would say, between Stewart and I. In the election cycles of 2004, 2008, and 12, sold an agency into WPP, did the similar earn-out as Stewart, and returned here with them looking at this sort of specialty business that we're eager to tell you about in the public policy and lobbying world.
Yeah. So what makes our company possible and our economic opportunity possible? It's the growth in US government and, frankly, Western developed democracies governments spending and regulation that has increased dramatically over the past 30 years. In the United States, we've seen a 5-fold increase in spending since George H.W. Bush, Bush 41 as we refer to him, was president, and at the same time a number of regulatory actions and laws that were passed that fundamentally altered the relationship between private business and industry and the government, creating now what really is a steady state engagement in a very complex and diverse landscape that our clients have to engage in to manage their political risk and opportunity. Next slide. So again, as I said, we help our clients manage risk and opportunity. Opportunity comes from that tremendous amount of money that's spent. Those are not all direct benefit programs for individuals. A lot of it is execution of government contracts and initiatives, of which our clients, obviously, in many cases, are seeking to take advantage of. At the same time, there is constant risk. If you look at that top right-hand arrow there on those arrows on the left-hand side, you can see that there's been a 70,000 increase in U.S. public companies identifying public policy risk as a key risk factor to their business in only the past decade. As a result, again, companies are having to spend more and more on these advisory services that we provide to manage that space. And those services are not just lobbying, what you would commonly think of as registered direct lobbying here in the United States, person to policymaker, but also the strategic communications and public relations aspects that we need to carry out and execute on behalf of our clients to create comprehensive programs where we can move issues, again, in what is a very, very dispersed digital conversation landscape that also has driven policymakers into places where they are very, very much need assurance that things are, quite frankly, safe for them to act on behalf of one's interest. So we deal in a very fragmented industry. We'll talk about some metrics in a second of the size of the industry, but in the fragmented industry we deal with, we are now trying to provide for the first time true scale and scope for our clients where they can manage this in one place with one advisory, one consultant, rather than picking from a laundry list, which was the traditional method of handling these risk and opportunities in our space. Next slide. So PPHC currently operates essentially in 2 baskets, as I just indicated. The first is what we call, again, registered direct lobbying, which is person to policymaker in the United States definition. It's a highly regulated industry, both at the federal and the state level, meaning that there's a lot of disclosure, a lot of transparency, and obviously significant sanction if you don't follow the rules. So very, very different than the system you all operate in the UK. But because we're able to identify how much is spent to the disclosures, we see about a $6 billion roughly industry out there just in direct advocacy alone. But on the other side, where I mentioned our clients are really spending more and more on is on the communication side of the equation, which is on the right hand, which is what we prefer to, again, call public affairs, which is really public policy communications. That's media management, that's media placement, that's constituency mobilization, that's research, anything that helps to move the public into the place where the policymaker needs to be comfortable to make a decision. That's where our clients are having to spend more and more money, and that's where PPHC continues to concentrate on as an engine for our growth. So very quickly, the company as it exists today is 7 operating verticals. I mentioned our WPP background. We believe in the holding company model for brand integrity and the ability to mitigate conflicts. If you look on the left, we have 2 pure play federal lobbying firms that are, again, don't do anything but advisory work and direct advocacy. On the right, you see, again, a public affairs firm that doesn't do any lobbying. It's not disclosed in the register, et cetera, but they really provide communication support, research, media management, et cetera. And then in the middle, we have 4 firms that are of mixed capabilities, both lobbying and public affairs, and even compliance and research. Good. Just to look at our clients quickly, we have 1,200 active clients across our 7 verticals. 40% of the Fortune 100 companies are our clients. We have half of the Fortune 10. Some pay us on the left-hand side, again, for direct advocacy only. Some pay us for public affairs and communications only. In the middle, though, you will see that is where the aspirational direction of PPHC is, and has always been our founding principle, which is in this complex landscape that requires both sides of this equation, we want to provide integrated services to our clients to run comprehensive, difficult, and eventually multinational campaigns that involve issues in multiple jurisdictions that are of interest to them. Go ahead. So just again, quickly, to talk about, again, our left-hand side there, which is, our federal lobbying assets. In this case, if you added them all together, and again, this is the disclosure registry, if you add them all together, we are actually the largest in Washington, D.C. in the federal space, and by a decent factor. That is, again, just only our Washington presence and direct advocacy. On the right-hand side, again, in the comm space, you will recognize some of these names. These are our peer competitors in the strategic communications market, which again supports our direct advocacy efforts. And again, this is an area where you'll continue to see us concentrate on for growth in the future. Good. So just very quickly on the platform, again, I mentioned we are structured as a holding company. PPHC is the financial integrator and business integrator at the top level, provides everything from human resources to obviously accounting, et cetera. I think one of the interesting things is that, we took the good and the bad from our experience with a large holding company like WPP. And the good is the conflict mitigation, this financial discipline and integration that takes place at the top. But the more important thing was we also realized that we really wanted to encourage our companies to work together. So we have a very strong internal cross-referral system. We continue to add capabilities at the top level of the company to get the companies to cooperate, because as you'll see when Thomas talks a little bit about M&A shortly, you'll see that our assets are built to be complementary. So there's no reason they can't and shouldn't cross-sell with one another based on either geographical reach or capability. So again, we strongly encourage the cross-sell throughout the platform. Roel, I'll hand it over to you to talk about financials.
Yes, I'll make a couple of comments on our H1 results, but obviously let me start with sort of our longer term picture, which really reflects steady progress, I might say. On the left, you see our revenue picture, which is growing year on year on year, across political cycles, because we're not really dependent on how elections shake out, as you can see here. Every year, growth is driven by a mix of M&A, which is denoted here in gray, or organic growth, denoted in red. Sometimes M&A is higher, sometimes organic growth is higher, but generally we're looking at growth. This past half year, we had important contributions from M&A through the acquisitions of KP and MultiState, and organic growth was 4%. Now, next year, probably the driver mix will be different again. On the right, you see our long-term margin. We're steering our margin to always be between 25 and 30%. And as you can see here, in the past, we've been very successful in doing so. Also, for the future, we're confident we're able to maintain a margin within that band of 25 to 30%. Where exactly we land in a particular year, that's a function of which segment is experiencing the most growth, whether that's lobbying or public affairs. Here are a couple of key numbers of our first half year, which we were really pleased with. Our revenues were up 27%, as already mentioned. It's a mix of organic growth and the impact of the acquisitions of KP and MultiState. Profit-wise, we delivered on expectations. It was EBITDA of 16.9 million, which represents 25.8% of revenues, and that was up 70%. And all the other profit measures that you see here are up aligned as well. Our interim dividend that we declared was $5 million or 4.6 US dollar cents per share. That is typically 1/3 of what we expect to pay out for the full year. We increased our interim dividend per share as well, but we do that a little bit slower than our profit per share because we want to conserve some cash for pending P&A and some debt repayments. So let's go to a number of non-financial items. So first on the left, our client profile. I would say that's an extremely solid client profile. We're currently at about 1,200 clients. That's up actually significantly from 800 last year, helped by the MultiState acquisition. As Stewart already mentioned, of the Fortune 100, we're serving about 40% of them, and even half of the Fortune 10. We're also tracking how many of our clients spend more than 100K with us. And last year, that was 384 clients, and we're on track to beat that number for 2023. You will have probably already deduced that we have a low client concentration. Our top client is only 1.4% of our total revenues. Our top 10 was only 8%. So we're not very reliant on one particular client. Retention-wise, actually, we're very strong. And you see that on average, our client retention is 85%. And I should say here that that's the balance between very high retention, 90+% in the lobbying sphere, and slightly lower, more in the 70% arena for public affairs, which is more project driven. Now then in the middle, our employee base, one very important point there to call out is that number of 75%. What that really represents is the percentage of our stock that's owned by employees. So 75% of our stock is owned by our own employees. And that acts as a very strong retention tool, as an incentive tool, and it provides a very solid base for a professional services company that we are. Also, we've been fortunate to have been acknowledged for various initiatives to promote the well-being of our employees. And we continue to invest in a rich program of internships and fellowships. And then on the right, just saying that ESG is very important to us. Our various member companies work for NGOs. They do pro bono work as well. And we're actually preparing our first ESG report to be published next year. So final words of finance in the financial outlook. And I'll focus here on the bottom part, which really is our midterm guidance. For the midterm, we expect our organic growth to typically fluctuate between 5 and 10%. That's really our sweet spot. Incremental growth we might get very likely from future M&A. And then our margin, as already mentioned, we're maintaining confidence that should be between 25 and 30%. Now, in the interest of time, I'm going to skip the pages that are following, which show our detailed P&L, balance sheet, and cash flow statement, but you're welcome to study those as they're incorporated in the handout. And now I'm giving it over to my colleague, Thomas.
Thanks, all. We made this very clear. It's been a build and buy platform. It started with a strong base of federal lobbying, which is where Stewart came from and where some of our lead companies. The nature of that portfolio, they pointed out, is both very transparent on the public register, quite profitable, and you need to have sort of something long-standing. So now we have 3 of the top 15 in town. The federal space for us, looking at the U.S., has been the first 10 years, right? First 8 years that this has been happening, 2 years public. When we look forward and the deals we've done post-IPO already, we're looking at 2 key areas. The geography, which jurisdiction our clients need our support in, be it federal US, major states in the US, Canada, and otherwhere abroad. And then in the issue specializations, whether it be in the lobbying space or the public affairs, public relations space, we're not dealing with consumer PR and we're not dealing with sort of broad reach. We're dealing with quite technical program language in defense, in pharma, in tech, and so it's a different level of issue specialization that serves across the nature of our employees. Most of our employees come from time working in Capitol Hill or a regulatory office, and so they apply their expertise and institutional knowledge for their clients. And that's the nature of keeping it, at a high end. The good thing with that is that when we look at targets in any jurisdiction, it's not a secret who the top lobbyists in California could be. We took a while to figure the right ones to fit into the platform, both because of the longevity, their scale, and their depth of sort of client, the depth with the client wallets. And we were successful with buying one of the best in Sacramento last year. When we look at the other opportunities, geography into every states, MultiState was something we knew we needed to be in more states, but we don't want to be a network built 20 years ago that you thought you needed to be in every state, because there's outsized importance in geographic needs. And for our focus on Fortune 1000, call it clients, they're not hitting all 50 state capitals. Through MultiState now they can, because of the slight brokerage model into the experts in states, while providing a really good client, overlay of the experience for, again, the big clients. When we look more abroad, and all of us within our WPP days worked in the international networks as they were constructed, both on the advertising side and in the specialty comms and PR sides. But we look at the jurisdictions in, say, Brussels, and we know that both a lobbying disclosed book of business exists and a lot of communications exists. This particular study is from Politico, that operates in both of those jurisdictions, but you can find in public sources information about our addressable market, and then make some certain assumptions around where the top brands in the world need to spend or what they spend. So again, we don't look at across all of Europe, though we're very active in M&A conversations in Brussels, in London, in sort of European capitals, as well as the handful of states that we've defined, or more so our clients have defined, as important to their risks and opportunity in this market. So the good time that we're having, despite high interest rates and a politics here that seems crazy on all partisan sides, it is a period of big government and big government intervention into corporate interests. Call it industrial policy, if you will, but it's identified on every radar as a hot space in the communications world, because it's where the board is keeping up at night and where the CEO is staying up at night. And you can see both in the deals that are being done and the private equity players and the public players that we're all sort of part of the ecosystem. We're attempting a consolidation of a very premium slice of it called lobbying, which is what's brought us here. And I'll hand back to Stewart for the conclusion, and then hopefully we have some fun questions.
Just quick top line takeaways, and then we're going to be happy to take questions. As Thomas just alluded to, we are, I wouldn't say counter-cyclical to the economic cycle, but we are certainly relatively immune to it, unlike some of, again, our peers, especially in the communication space, because, again, as you mentioned earlier, we don't do consumer work. We don't rely on advertisers. We do the really high-end things that often some of the larger companies overlook. We've got very sticky relationships with our clients. We retain this year over year. They're a blue chip group. And we have an absolutely outstanding senior management team that's been culled from, again, an awful lot of much larger company experience. Our financial profile, again, our margins are significantly higher than many of our, I guess I would say our peer competitors, again, in the communication space. We turn cash very well because of the retained nature of our contracts. So we're a very, very healthy cash flow business. We are using that to obviously support our M&A efforts. Our dividend payout, as Roel discussed, is very, very attractive. It also aligns our external shareholders' expectations with, of course, our employee shareholders' expectations. So it's a very healthy alignment, again, of outside and inside holder interest. And then finally, our growth prospects, as Thomas talked about, are excellent. We're building an international network. We've done a great job here in the States thus far of really being able to reach into the key jurisdictions in the United States beyond just the federal on both the comms and the lobbying side. We still have a lot to do. There's a lot of other capabilities we can add. But again, this is an industry that's begging for growth and consolidation. And as we take the next steps on our M&A front, you'll again see us continue to add what we think are highly complementary assets that fit our margin profile and obviously work well together in the aggregate. Thanks.
So we've got time for some questions. The first one, I'm going to jump on straight away, was regarding the recent RNS about the restrictions lifting of Reg S. So how has that helped, and what is the good news about that particular piece of information for us in the UK?
Thomas, do you want to provide an update there?
Yeah, basically the Reg S is an SEC sort of US restriction on the employee stocks and then the tradability of them. We've lifted that after the now it could have been 1 year, but we did it 1.5 years, which is that flag has kept us off of the leading platforms in the UK and across Europe from a tradability. So we're on, quite sort of third tier, but because of that Reg S exemption, it's called, the lifting of that will allow more of a retail trade because of simple access. And people on this call and this view will be able to see. Mm-hmm. We have a guidance of this month, which is why in that RNS you'll read the language that's carefully constructed in the coming weeks because of the sort of the layers involved between registrar and banking. That exact day has not been given to us. We hope to come to this with a date. It will be very soon, and you can and it will be posted to our websites and such when such.
Okay, thanks for that. I've got to touch upon this. How does the company feel about being recognized as lobbyist of the year, the Financial Times story?
Really proud. I mean, really proud, I would say. Stewart's the longest serving lobbying, but it's a great headline for someone who works in communications. Though from the international perspective, this is the curious conversation or challenge we face because of definitions of the term here are more understood because they're defined by law. Stewart, you're the lobbyist.
The fact is our business, and I didn't because of the truncated nature of this presentation, I usually go into this. Our business has changed dramatically in the past 2 decades. And that is really, I mentioned it briefly, the disruption in communications caused by the digital reformation of all of our political conversations and policy conversations have created an environment where it's much, much more difficult for policymakers to act very decisively, I think, on anything. And as a result, because there's just too much conversation, too much scrutiny. Same time, our clients, they see basically with the advent, especially of social media, every reputational problem becomes a political problem. Every political problem becomes a reputational problem. So this is all feeding on itself. So the old school days that I grew up in originally, which was, again, person to policymaker, make your best argument, take your best shot, see what happens, is not as effective anymore, or not even close to as effective without all of those other assets we spoke about that were in those red boxes on the side that really help shape the environment to make it much easier to create a public consensus for policy action. So that's really where the business is heading. So lobbyist is by definition, while again very, very rigidly defined in the United States, is a very, I should say, is not a small part of what we do, but it's not the final evolution of the company.
Thank you.
For those of interest on that I'll say every quarter, a couple of weeks after the quarter, you can see on government websites and our sort of third-party media that cover it, every lobbying dollar that comes into us from clients as disclosed by the clients. It's that that doesn't exist outside of Washington. It's coming to Brussels and across Europe, but it's not to that level. But check in a couple of weeks and the rankings will be out again. Sort of we see the scale of our scale of it provides greater comfort for the clients that work on us for years and years and years.
Okay.
Clients need the accountability of it, given the disclosures here in the States.
Right. Okay. What has been the main driver for recent revenue increase? Has increased revenues 27% to $65.7 million in Q2.
Mm-hmm.
Go ahead, Roel.
Yeah, so of the 27% increase, 4% was actually delivered by listing companies, which is actually great growth, especially when you compare it against what we've seen our peers present. But then on top of that, the other 23% growth were driven by the incorporation of the acquisition of KP, which we did in October last year, and the acquisition of MultiState, which we did in March this year. And just to present it more clearly, we kept them out of the organic growth.
Okay, I've got time for one more question. Where is most of your profitable work focused? Is it on the federal or national level?
It really is. It's mixed. Our federal lobbying assets, I mean, just by margin segments in each of our businesses, federal lobbying is the most lucrative. There's no doubt it's the highest margin business. You can have firms where a principal on an average generation by principal can be 800,000 US. So significant margins there. State level, the companies that we own directly, like in Boston and in Sacramento, where there's a lot of activity, generally the rates that are paid there for the top firms, which ours are in both markets, will generally mirror the Washington rate. So on the lobbying side, they generally are close to the Washington margins. On the communication side, our assets, again, I mentioned this earlier, do not concentrate on consumer, lower end things, direct to consumer advertising, et cetera, stuff that's highly cyclical. Instead, again, they concentrate on the high-end support communications that are necessary for our clients to succeed. As a result, their margins are simply higher. My company, a subsidiary of a PR company owned by WPP, did not run anything close to the margins that our public affairs firms run. So they do run higher margins, just not as much as lobbying. That's why when Roel shows you kind of the ebb and flow between 25 and 30% margin, sometimes that is affected by the mix of companies at the time. But again, all of them highly, highly profitable in their own segment, right?
Okay, that's brilliant. Okay, chaps, I think we're over on time, but I'll just say thank you very much for that presentation.